going on, guys? Charney here with another YouTube video, and in this video I'm going to break down what's going on this week, the plays I made this week, the trades I had in the 5-minute time frame with gold and silver, trading my internal 5-minute trading strategy, the money I've made on stocks. I cashed out on 2 plays totaling over $2,000 locked in profit on these 2 companies, and I picked up another company as well at a very cheap price that I sent out to my Discord. So I also was telling my Discord this week that it is a very good time to start looking into Bitcoin, load up on some Bitcoin, and I couldn't have timed it any better. No one knew that this was going to happen like this, but I did mention, listen guys, this is a very good accumulation zone right here, and literally later that day, we ripped, absolutely ripped, after Trump passed the crypto, or said he was going to pass the Crypto Clarity Act. And he also had a meeting with all of these crypto experts and all these cryptocurrency companies. Things just kind of got thrown around the room a little bit. Now, this pump right here is not healthy at all in the crypto market and the investing market. It is not healthy at all. This is like an elastic rubber band. When things move this quick, they will always snap back. They will snap back very quickly. Okay. This move is not healthy for the market at all. So something like this will snap back. And there's a decent possibility that this is not the start of a bull market. As crazy as that sounds, people think that this is another start of a bull market. I'm going to get into that a little bit later and give my reasonings on why I don't think that is actually the beginning of a bull market. So let's look at like kind of what happened this week. I'm going to put my camera back down here in this corner. And let's look here. So let's first start with the trades I took this week. So this is on the 5-minute time frame. These are the trades. Now I didn't actually take any trades, but I saved myself 2 major losses here just from being very patient. So first we have this gold trade right here on Thursday. So this is an Asia session right here. So what we have is we have our demand zone. We have our level of liquidity. By the way, guys, I'm going to be going over all of the stocks and stuff like that at the end, and I'm going to be going over where the market is at right now in terms of AI spend, why this week's kind of holding off, NVIDIA earnings next week. All of this great stuff is going to be at the end. For the basic trading, my trading strategy, this is Asia session. So this was Asia session. This is my demand zone. Again, the way I trade, if you're new here, I just trade supply and demand with liquidity levels right in front of it. And this is a nice higher low followed by this high, got swept by this high. So we're confirming the trend here. We just want to make sure we see that. Price comes down, takes liquidity, and we want to see a bullish candle. Now, we got a break of candle right here. Now, this is, again, a break of candle is anytime we have a bullish momentum break of this first candle that tapped the zone, that last candle was high, we can enter that trade. We got that, and honestly, I held off because I just did not see the reactions I wanted to see. This candle was good, but this candle was very confusing. It was not showing any bullish momentum. It was not really showing any selling momentum. I was fine with waiting for a nice bullish close here, and we never got that. If you would have entered break of candle right here, you would have had a long position, and you would have put stop loss right under that wick. You aim for a simple 1 to 2, and stop loss would have got hit very quickly. So, good thing, I skipped that trade, I guess. And yeah, just kind of, just really just looking at the market, and the more you kind of watch the market live, see candlesticks play out, that's kind of what's going to give you that edge against the market. That is the only reason I really stayed out of that trade. If I was following a strict mechanical entry model that told me, hey, you have to enter a break of candle here, that it's kind of a double-edged sword. Sure, sometimes can it save you from, skipping out on winning trades? Yeah, but most of the time your intuition that you're going to build throughout the market and just learning how to study and gauge the market, that's going to be the biggest help to you. So that was an example on that gold trade. And then we had another one of these gold trades actually, I believe today on Friday. Yeah, right here we was. So we had this trade right here. Oh, sorry. Wrong thing. I believe it was this zone right here. Yeah, I believe it was this zone right here. this zone, gave a nice reaction, nice level of liquidity, price came down. Looked great. We got that first initial reaction. We got that second candle. Now this candle right here got this massive wick, came the whole way back up here and flipped bullish. You know, if you were very aggressive, you could have got on that bullish candle close right there. But just staying patient, kind of realizing that, you know, okay, we are pretty overextended. We're running really, really hard right now. You know, for price to retrace just right here and continue pumping up, that's a pretty substantially big move for gold right there to not have a deeper retracement. You know what I mean? If price just came right here and then bang, new high, that is a very, 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 very strong 5-minute trend. You know, I'm not saying that can't happen. It's just not normal. A more obtainable trend would be something like an actual retracement into the market and continuation up, like we, you know, saw. And yeah, just really that overall, that massive gap, imbalance right here. The EMA being way down here. I kind of suspected gold would trade down lower anyways. Would I still take that trade? I would, but that's why I'm being more patient with my setup, and I want to see an actual bullish candle close, and we never got that. If you was aggressive and you took as soon as that bullish candle or that bearish candle flipped to bullish, you would have gotten stopped out on this trade. But that is pretty much all I saw this week. And this was a massive week for actual plays in the stock market. So if we go over to the actual stock market, the plays I made. So as you guys know, I was screaming buy on Microsoft at the $390 level. I was kind of loading on the whole way down, but I had an average cost of $393, and I was screaming, buy this, buy this, buy this, buy this. Everyone I knew, buy this. I post on my Instagram story, guys. Follow me on Instagram for free stocks and stuff like that. I posted on my Instagram, buy Microsoft. I'm loading Microsoft here. No one did, and you know, you're picking up one of the biggest cash engines in the United States, in the S&P 500, for a 30% discount from the highs. And this stock rocketed 30%, and it didn't even reach its highs. To its highs is 40%. And I sold this stock for about $500 a share. So we caught those gains, and Nebius right here, massive AI infrastructure play right here. This stock I was loading at an average cost of, I believe it was, I can't remember exactly. It was in my stock portfolio tracker. It was just above 200. It was 2 something. And I will find that for you, and I will post that somewhere up on the screen here. But it was 2 something around this area. And this was a beautiful, just a simple retracement. As these stocks were retracing down here, these were beautiful retracements. I think I bought this stock around this area. So I bought this stock right around this area. Oh, my average cost was $220. That's what it was. I bought the stock on the way down around this area, and I had money in Microsoft. Microsoft played out. I cashed out Microsoft, and I loaded Microsoft profits and the whole trade pretty much into Nebius. So I put money into Nebius at I believe it was 218, and I got my average cost to about 220. So rode this stock up. And then this day right here, we had earnings. So I forget specifically what day I bought my second set of shares on. But we had earnings, and earnings absolutely ripped. We ripped on earnings. Massive day here. Absolutely massive day. And this was not a big profit-taking day. So sometimes you'll see these companies, when they report big earnings like this, will pop up and we're open and we're dumped from everyone taking, profits. In this scenario, we had an earnings spike, but it wasn't like a crazy earnings spike. It wasn't like, okay, day ended down here and we spiked, up here, okay? Obviously, we're going to have a massive sell-off going down. This earnings spike was pretty big, but it wasn't absolutely insane. And it was just the following through of the buying. And it was because people, I don't think, realized kind of, wow, this company really blew numbers out of the water. Every company's been. They said they have enough compute to sell out their entire 2027 supply on today's terms right now. But they're choosing to wait because they think they can sell it for more at a higher premium price because there is so much demand. So that gave, investors and shareholders a lot of confidence knowing that, okay, demand is still there. That is the biggest thing right now, guys. Supply and demand. Still, it's like 15-1 right now. There is so much demand that supply cannot keep up with it. There is so much demand that supply cannot keep up with all of this AI stuff, AI chips, AI infrastructure. And that is the main thing people was looking for. And when these companies come out and just straight up say, look, again, we're telling you, just like every other company's telling you, we cannot keep up with demand. We actually can sell out everything right now, and we're choosing to wait because there's so much demand that we can actually raise our prices. So that was massive for investors. We had a massive rally here. And it was actually, I couldn't have timed this high any better. I sold this day on market open at about 275. I'll put it up again somewhere on the screen. And I posted on my story, my Instagram story. I made it public that I got out of this trade. And I, again, in my Discord, in my trading Discord that I will put in the bio, I was telling everyone, listen, I am buying this stock down here. I fully believe in this company. I wrote up a big thing about it. And it played off this earnings cycle. And I believe this company will still continue to play off. I got out of this company because I saw a very good opportunity in another company. At the time, it was very cheap. While all eyes was on Nebius, its earnings, there's another company that has its earnings coming next week that I feel like it was undervalued. I feel like it's very, very undervalued for what they do. And they haven't had a earnings blow off top like Micron has or any of these companies like SanDisk has, and I feel like they are going to have one of those. So I'm very confident in that company. So I took I think it was like 26% gains from Nebius here, and I cashed out on August 17th this week, and that was on Monday. And I did the same thing on CoreWeave. So CoreWeave and Nebius, they operate the exact same. All eyes is on Nebius right now. A lot of people love Nebius more. But CoreWeave, same thing, at an average price of $85 a share. So my average was right around this area right here. I was loading up all around this area. So $85 a share is my average price. And earnings came out. We blew it out of the water. You kind of see a couple days before earnings, we will consolidate very tightly because people don't know kind of really what to expect. Sometimes we will run, though. You see right here, we had earnings. We ran really, really heavy into earnings. But sometimes we were just kind of consolidate. So earnings came out. Really, really nice earnings. We popped, but we didn't get that continuation like Nebius. They had great earnings and all, but Nebius just really laid it out a lot better in their earnings call, in my opinion. And a lot more people are attracted to that Nebius stock than anything. They have a lot more partnerships. It's a little bit more overvalued, but it's also a lot more liquid. A lot more people trade it. A lot more people talk about it. And that's kind of why you see it move the way it moves. Now, this same thing I sold August 17th. So I sold this stock right here on this day. All of these were mainly at market open. I sold these. So again, I was fine with holding CoreWeave up until this level right here. I was fine with holding that, but that earnings pop was already a 20-some% gain for me on my investment. And we had a typical consolidatory day. I was fine with seeing that, right? We didn't have an earnings pop and a massive sell-off coming right back down. We didn't see that. If you have an earnings pop and a massive sell-off, investors are probably not too confident in the earnings call. And if they're not too confident, they're going to take that earnings jump and take their profits and get out. If they have an earnings call, and that doesn't mean just because they beat earnings, it's great, right? They can beat earnings, but say, hey, we're lowering guidance for future earnings. We don't think it's going to be as good, or we think, supply, or we think demand is going to slow down, this and that. It doesn't matter if they beat earnings and they pop up. If they say that stuff in their earnings call, it's going to fall. Investors are going to get out. that is why you see some companies' earnings, they will pop, right? And they will dump. Kind of like how CoreWeave has. We tried to rally 2 days, but it was mainly just 4 days of sideways movement, and then we continued dumping with the overall market. This dump right here, specifically on Tuesday, bloodbath of a day. Bloodbath of a day. And that was a rough day. Rough day right there. That was bonds hitting all-time highs. I will get into that in a second. But we really failed to rally. We failed to rally higher. And I saw that we failed to rally higher. And I was fine with holding, I was fine with holding this day. I was like, great, we're going to our target. And we just haven't really followed through that with that. Whereas Nebius, where they casually beat earnings as well, they had a lot better numbers, and they just openly admitted, listen, guys, the demand's here. We can sell out all of our stuff. We are fine. Like, we are fine. We're good to go. That is what investors want to see. So they get the same AI pop because they beat earnings, but earnings actually followed through because people liked what they heard. Now, the sell-off, that came from bonds. This day right here, this came from massive bond sell-off. I'll get into that in a second again. But CoreWeave as well, I was fine with holding this. Now, at this point in time, though, I wanted to see this. I didn't see the initial straight pump there like I wanted to see. And earnings, the big earnings pump kind of just died off. Volume got really, really low. And again, there was one specific company that I was really, really liking that I felt like they were going to do really good to finish out Q4. And I was like, we're up 20-some% right now. I can hold CoreWeave. And CoreWeave wasn't one of my biggest holdings. And I was like, okay, sure, we can hold CoreWeave for another, hold it from $107 to potentially $132 a share or $121 a share. But I really see my money doing better in this other company that I feel like is going to absolutely melt faces in Q4. That's just my personal opinion. And just felt like I'm better off taking I think I had 20-some% returns again on this stock as well. And I was like, I'm just going to take my returns here and put it in this company. So I got out of CoreWeave and Nebius on August 17th, and I bought another stock that I was very interested in. If you want to know what that stock is, again, I show all of them in my trading community. I will link it below. You can also see my live portfolio tracker. I'll also link that below as well. But yeah, that was pretty much this week. Capitalized on some gains, took some profit on some companies, which was very good. Nebius, again, Nebius was great, but we had a couple days of straight green, lots of buying pressure, and could it continue? For sure, it could continue, but we had that bond sell off, and we were getting super close to my target, which I was fine with holding. But it was, again, there was a company that was really big on sell that I really wanted to pick up, so I just took my profits there. And Nebius is a great company. You can see this; it's just beautiful trending market, beautiful higher low holding up on this EMA right here. I believe this is a 200 EMA. Nice head and shoulders, and we just casually pump up. I honestly suspect this to kind of rally up as well. And I just expect this to have another rally, right? We could have another dip to this EMA potentially for sure. But I just expect all this stuff to continue rallying. So that's pretty much it for the market overall. The Mag 7 still just kind of hanging around, chopping around. Meta's down. Meta's in a lawsuit. Google, this is an example of great earnings, but what they said in their earnings, investors didn't like. They beat earnings, right? They completely shouted earnings, and they beat it, but they said, hey, guys, we're actually going to spend a little bit more money on AI. That is not what investors want to hear. They want to have companies that are making the cash flow. They want to have massive cash flow companies. People don't like to hold these companies when they are announcing this type of stuff that, we're spending more money. Realistically, do people know that that's going to result into more money down the line? Yes, but for short term, people don't like to hear that. That is why companies like Nebius, where money is flowing, will pump. So what you see is quite the opposite, is earnings tank, but then it gets bought up because you're buying freaking Google stock, which is, again, a Mag 7 in the United States, in the S&P 500, at a very cheap discount. You're buying it at literally at a low of, 300 some dollars, compared to this is a $400 stock right here. So people are buying that up, and just literally, a week and a half later, it's already up. I don't even know what percent that is. It's already up 18-20%. So that's kind of what happened with Google there. Amazon, it's not spending as much money on AI, so that's why you kind of see it continuously putting in higher highs, because it's not spending as much money on AI as of right now. They're just kind of a free cash flow machine. Memory is looking fine right now. Memory is looking beautiful. It looks like this is going to be a slow and steady drag up. That's what it looks like in my opinion. I feel like it's going to be a slow and steady drag up. People think, again, memory is a cyclical thing. Memory is very cyclical. If you look back at any time, we get these pops and we get these dumps. We get these pops and we get these dumps. If we really look back. Now, this company is obviously, it's going to rise over time, but it's a very cyclical company, right? If you look at all these years, you get these pops, you get these dumps, you get these pops, dumps, really big bull market here. But you're mainly getting these pops and dumps, and memory is very, very cyclical. And that's what Micron is doing. But memory stocks in general is just very, very cyclical companies. But people don't realize we're entering a new era where this is no longer just a big pop and then a dump. Because memory is going to be, it's single-handedly the most important thing in the AI build-out right now. It's the most important thing in the AI build-out, because every single AI model requires memory, and it's not leaving anytime soon. So, yeah, this stock is great. It's just a little too. It's up there for me. It's up there. I think there's a lot of other companies that can offer great returns. That's not quite as priced as Micron. Micron is just ripping. But yeah, that's it. We're kind of seeing the same thing right here. Massive pump. We see cool off into these EMAs, and we see continuation up. And I just think that's what we're going to see right now. Now, what is the roadblock we're running into? You see all these companies, SK Hynix, SanDisk. Same thing here with SanDisk. SanDisk really absolutely ripping. It just melted faces. I mean, you're talking about a stock that was, $43, and it is now $1,500. Absolutely insane. Look at Broadcom. See the same thing. Broadcom's looking really, really nice, bouncing off these EMAs. See Marvell, same exact thing, bouncing off that support level. And all these companies they're just poised to continue up. They're really strong companies, really big retracements. Again, this retracement, it is a very interesting story. Very interesting story. Citadel, which is a massive fund, and Ken Griffin, at this point in time, published all of these things saying, guys, they're going to raise interest rates, this and that. The market's going to be collapsing. S&P's at all-time highs. This AI build-out cannot last. Okay, so what do? They drive fear into the market. This is why I always say you got to do the opposite of everyone else. They drive fear in the market. Okay, so they start driving fear in the market. Bang, bang, bang. Everything crashes. Now what happens? Markets crash. Someone like Leopold, okay, which I've talked about before, wrote information about all of these stocks before any of them took off, wrote out the entire AI build-out. He used to work at OpenAI, this and that, and predicted everything and had money backing it. And he's a trust fund kid and had JP Morgan finance him millions of dollars for this fund. I forget exactly what the number was, but it was something like he took 20-some million into over I believe it was, how much was it? It was a couple $1 billion. How much did Leopold build his fund to? I forget exactly what it was. $45 billion. That's what I thought. Yeah, so $45 billion at his peak. Okay? And he was using 4x leverage. Citadel and Ken Griffin, which is known for this, known for putting funds out of business and driving prices down, they will scoop them up at a discount. So they make all these fear headlines because they know this dude, $45 billion tied to this market, and he has all these companies, right? Drives this down. He forces him to get margin called. So again, all of these companies, JP Morgan's calling him, hey, we need our money. Can you cover this cost? If not, we're going to force liquidations on your positions. Leopold did not have the money, so Ken Griffin came in and said, hey, we'll buy up all your stocks at a 10% discount. Bought up all the stocks. Next thing you know, Ken Griffin, Citadel, they go from, this is Ken Griffin, by the way. This is Ken Griffin. He comes out and says, hey, we actually think that this is a great time to be buying stocks as they're on sale right now. This is after they did the whole manipulation in the first place, driving stocks down, gets retail to sell, gets retail to panic, so they can pick up Leopold's. If we look at Leopold, very young prodigy, sells, gets liquidated. He picks up everything from him, and they pump price higher, saying, "Hey, we think this is a great time to buy. This is actually an amazing time to buy right now." Things pump higher, and what do? They sell out all their positions at a profit. Wall Street is ruthless when it comes to this stuff. It's very interesting as well to hear all these stories. It's very cool to hear all these stories, in my opinion. It's very cool. Again, like I said, they're picking up all these stocks at this price. They say, hey guys, everything's on a discount. Fed's actually not going to raise rates, and things look great to buy right now. What does that do? Well, after they hear of this massive liquidation event, people kind of know what's going on. They know that, okay, the only point you have big retracements is to get opposing liquidity taken. That actually applies in trading as well. Like, you have to take opposing liquidity to actually continue up. It's the same thing in my 5-minute entry model, guys, that if you actually trade that and you're watching this to the end, it's the same thing in the market, essentially, just at a very big scale. And liquidity gets taken, and they scoop up all these great companies, and they casually ride them up 30, 40%, and they sell out. And they just came out actually today and casually said, hey guys, we actually sold all of our positions, all of Leopold's positions. It's crazy. It is crazy. So that was why kind of the market had some downturn today. You see Marvell down 5%, AOI's down 3%, Iron opened very strong, pumped up. Again, Iron's just like Nebius and CoreWeave, opened very strong and then just dumped. You can see really not too much green today. Not too much green. If there was any green, it was barely even 1%, and that was pretty much it. So overall market was just red today. Some stocks getting beat up really hard. And yeah, that's pretty much that there. So what is the components of this market not really rallying right now, right? We have a very scared market, right? We have these big retracements, these big liquidation events. We have continuation up, and you can see, guys, earnings, right? We're great, 2 days, and then bang, we're back down to big retracements. This market is volatile, guys. Look at this. Every single move right here, I don't think you guys realize how volatile this market is. This is a 40% swing in 5 days. 40%. This is a 36% swing. This down here from up here, this is a damn near 60% swing. All of these are massive swings. Massive swings, okay? They're massive. The market is volatile. What is holding up the market right now? It's bonds, okay? This is a very interesting double-edged sword topic right now. And what is essentially happening right now is we're at war with Iran, and oil is very high. Oil is high. It's bad for inflation, and it's bad for the consumer. It's bad pretty much for everything, right? Oil needs to come down. Now, is that stopping AI spending really right now? Not necessarily. AI has money to spend. Now, what does AI have to do to spend all their money? They have to borrow money, right? So, like I told you guys in a video before, the Mag 7 accumulates all this money, spends all this money on AI infrastructure, which Nebius, CoreWeave, AMD, Broadcom, Marvell, all these companies are benefiting from. Then you go down another layer of who's powering these data centers. That's Bloom Energy. You can go down all these layers, right? That is the AI build out. That is the AI revolution as we know. We're in the middle of a revolution boom, and not much people are picking up on it. So what do they have to do? They have to borrow money, okay? Well, that all goes on bonds. If bonds goes really, really high, then borrowing debt becomes really, really, really expensive. Bonds hit a high since 2006, 2007. They have hit record highs. And yeah, so the government does not want to raise interest rates right now because they know it's going to kind of tank the market. They want to keep, and they plan to keep, interest rates the exact same. Now, they're not going to lower them either because that's even going to hurt the market, and that's going to hurt the debt even more. So they're just keeping interest rates how they are. How do they plan to get out of all this debt and bring bonds down? They plan it by actually raising the money that, again, the United States as a country, as a whole, is making through what? AI and big infrastructure, which are these guys. But these guys can't build without borrowing money to build, right? They used up all of their free cash flow. Google went negative free cash flow, which is the first time in history it's ever done it, just to build out AI. Because if they don't, then one of these guys are just going to eat them alive. So it's a race between all of these guys. Okay? And the government knows that this is growing, and this is their plan to kind of get out of debt, is building AI infrastructure, building data centers, doing all of this stuff, right? That's what's going on right now. The problem is they need to borrow money. They cannot borrow money when bonds are at all-time highs. And it's too expensive to borrow debt. That's essentially what, bonds are. It is too expensive to borrow debt. Yet, the government is relying on them to bring them out of debt. So it is a double-edged sword right now. I had AI break it down in a better way, right? So it says, there's another massive reason the government isn't giving big tech a free pass on bonds. The AI infrastructure build-out is consuming unbelievable amounts of electricity, threatening to drive up utility bills for everyday voters. To counter this, the Trump administration rolled out a ratepayer protection plan, forcing AI companies to pay their own way for all the energy infrastructure and grid updates they require. Because the government is forcing tech giants to fund their own data centers and energy grids, companies like Microsoft, Meta, and Alphabet have no choice but to flood the market with hundreds of billions in corporate bonds. This massive tech borrowing is directly competing with U.S. treasuries, driving yields even higher, bond yields even higher. So again, the government wants the AI miracle, which is AI infrastructure growing to actually bring that down for the economy, but they can't artificially suppress bond yields while running a $2.1 trillion annual deficit and dealing with an energy war. The ultimate relief valve for this entire market is Monday. White House is meeting regarding Iran, so they're supposed to have a meeting. The U.S. successfully details a plan to throttle the Iranian economy or secure the shopping lanes. Oil will collapse, and if oil collapses, a collapse in oil is the only thing that will simultaneously lower inflation, give the Feds green lights to cut interest rates, and finally drop bond yields so AI stocks can break out. That is where the economy choke point is at right now. It is a very, very deep, interesting type of thing that's going on right now. It is very, very interesting. It's very interesting. We've never actually had something in history with all of these things connecting together. It is very interesting how this plays out. I'm still bullish for a couple reasons. I'm still bullish because, first of all, at least the companies I'm in companies that it doesn't matter if this company outperforms another company, or Microsoft outperforms Google or something like that. I'm in a company that's benefiting from all the AI spend that's happening regardless. Okay. I'm in a company that's signed recently massive deals with Google. Okay. I'm in a company like that. Is it still in the AI build out? Is it still subject to get crushed? It is. I have big portfolios in this company, big loads of money in this company. But the reason I don't see this happening is, you guys know Trump's a businessman more than anything. And the last thing you want to do right now is, with all of the massive AI infrastructure being built out right now, and the tail and seeing this as a government perspective, they see that, hey, this AI build out and the money to make can actually take debt off of us. This can actually, if we have an economic revolution, AI revolution in this country, this paved ways our way to pay back our debt. And this kind of saves the country in a way. This is the only way you kind of get out of it. So, in a sense, I don't see them saying, yeah, screw off AI companies. That's pretty much it. We're just going to continue raising bond yields, and that's pretty much it. They really have no purpose and better in doing that, right? So you think about it, the best thing they can do is just, they're the government. They can just lower bonds, this and that. The problem is they can't really just do that. So they raised, their payback normally in bonds is $2 billion. They raised it to $4 billion, which is not a drop in the water compared to the $40 trillion that we are in debt, the United States. And for one day, we had a drop in bonds and we had the stock market rip. And then consumers and investors realized very, very fast that, wait a second, $4 billion is absolutely nothing compared to $40 trillion. So the bonds continued raising. And the U.S. knows this. And this has all happened just this week. And I think that is why there is a meeting Monday. And of course, Trump can say anything today. He can say anything tomorrow. He can say anything Sunday. And, anything can happen at any time. But this meeting Sunday or Monday is pretty important, right? If we say, hey, we're still going to war with Iran, this and that, things could prolong longer. But I think, honestly, it's a bump in the road for the whole AI infrastructure. And I think we'll continue after this. I think there's loads of more opportunities we continue to see. And that's just me personally. I think it's just a bump in the road. And that's it, to be honest. That's personally, that is all I feel it is. And if they come out and say they figure anything out with Iran, anything out, oil prices drop. Oil prices drop can lead to lower inflation. That leads to lower bond yields, and that leads to AI infrastructure coming back, and the USA keep on pushing AI infrastructure, because that can pave the way to start paying back the debt that the USA is in, which that is Trump's whole goal, is to lower that. So that's kind of the breakdown for what's going on for you guys that want to know. It's a double-edged sword. It's really a double-edged sword. And if you read this is going to give you a better understanding. So beyond an oil crash, only 3 major events permanently resolve this deadlock. So an AI monetization proof of concept. Right now, tech companies are borrowing heavily to buy hardware, which drives up yields, right? So Mag 7 is borrowing money to, purchase AI hardware, which is Nebius, all that stuff. Memory, Micron, all that stuff, which drives up yields because they're borrowing so much money. But they aren't proving to Wall Street that they can cash in on the end software yet. So as earnings coming in, they're borrowing so much. Earnings is great, but they don't have enough to pay off all this debt right now, right? Major tech firms start reporting massive tangible revenues, specifically from AI subscriptions and enterprise software. The market will stop panicking about high capital expenditures. High borrowing costs won't matter as much if the profit margins are proven to be real. They are real. We just haven't had enough time of that, I don't think yet, personally, right? We've had Q1 was the major announcements of the spending. Q2 was the real revenues that we gotten back, and they're great, but they just aren't enough for what they were spending. The Fed's employment pivot. The Federal Reserve refuses to cut rates because inflation is sticky. They will eventually be forced to cut if the labor market cracks. If unemployment spikes or consumer spending drops significantly, the Fed will abandon its inflation fight to protect jobs. While bad for the broader economy, a weakening labor market is historically the definitive bull catalyst that forces bond yields to plunge, unlocking tech stock growth. So, yeah, and a drop in consumer hasn't really been here yet, which is really, really good. Walmart tanked a little bit, and that wasn't actually due to that. But Ross and a couple other consumer clothing stores and just normal stores in general, they had their earnings and they were great. So that kind of defeats that purpose. And there's just a bunch of other information here. There's just a bunch of other information. And yeah, you guys can do your own research. Yeah, it's a very interesting market we're in right now. We've never kind of been in a market like this. And I've been personally here for the stocks of it. I still trade in my 5-minute entry model and stuff. But these stocks right now, there's loads of opportunities, and there's been loads of opportunities. And I still think there's opportunities, but it is very interesting being in this type of stuff. You're learning so many things at once instead of trading just a 5-minute entry model. Like I said, a 5-minute entry model on gold and silver, I know it. I know like the back of my hand. I have all the data on it. I know when to trade it. I know when not to trade it. That's that, right? But when you're in the game of stocks and economics and stuff like that, the learning is just unlimited. It's like you're a sponge, and if you can soak up as much as you can each day, you're gonna get better. Whereas trading, in my opinion, there's only so much information you can soak up each day, realistically. And you're gonna go into analysis paralysis, and you're gonna be looking at stuff in the 5-minute time frame that doesn't apply to trading strategy. Whereas stocks, investing, and stuff like that, there's loads of information that you can learn that will literally, save your portfolio, make your portfolio better, and stuff like that. And that's why I kind of like this stuff. And this has just been a massive learning opportunity for me personally. And I'm sharing every stock I'm in, my reasons for being in them, and any updates in my Discord. Again, I will link that below. So if you guys literally want to learn any of this stuff, I've been doing this for 3 years now, and I've made loads of money on investing into AI companies since really the start of it. I was buying SoundHound AI stock for like $1 some back in the day, and I like 4x'd my returns there when they signed a deal with NVIDIA. It was massive. So yeah, I've been doing this for a very long time. If you guys want to know my insights and the stuff I get, as well as if you're interested in trading on the 5-minute time frame, that is all in my Discord under one thing. It's all in my Discord. I'll put that link in bio. I also teach how I built a detailing company to 100K a year revenue, actually over 100K a year revenue. And yeah, I teach all of that stuff. Everything that I know, I'm just showing it out there. Giving you guys free sauce. And yeah, that's pretty much it for this YouTube video, guys. There is some companies here that are very good, and I think they're going to melt faces in the future. If we go back to Bitcoin, I will eventually be doing hella videos on crypto when the cycle kind of comes back. I will be doing that. But as of right now, guys, I'm not going to lie. It looks massive, right? This move looks massive. I don't buy it right now, to be fair with you. I don't buy it. At least in the lower time frames. This is the most overbought Bitcoin has historically actually ever been at one given moment. It's kind of crazy. And this all sparked from kind of news and headlines. I believe that there'll probably be another liquidation event where we come down. And we may not essentially make another lower low, but I know for sure that we will have a retracement. Whether that's a quick retracement or a deep retracement, it's not just going to pump like this and that's it. You miss and that's it. We're going to the highs. It would make no logical sense at all. The 4-year cycle timing would be thrown completely out the window. Every single cycle we bottom at in Q4. That is historically our bottom. See, in August, this is back in 2015. Now this is from the highs here to the lows was 630 days. This cycle is really just the first cycle of Bitcoin, but this is where mostly everyone starts tracking in. And we bottom around that Q3, Q4 type of area with 630 days to that low. And if we look at this one right here, we bottomed 371 days in Q4. And if you look at this cycle right here from the highs to the lows, again, bottomed 364 days, like literally to a T, 360 some days in Q4 as well. And yeah, can the bottom be shorter this time? It for sure can be, right? Could this specifically be the bottom? It could be. But needless to say, I do not think Bitcoin will just pump green after green and we go make new highs. I don't see that happening. I definitely see retracement coming inbound. It would just make more sense for everything across the board. And Bitcoin's kind of pumping right now because it's digital gold. There was great headlines this week, and the bond thing I was talking about, that puts more risk on AI companies and more safety net on digital gold, on real gold. That's why you see gold actually ripping right now. That's the safety net type of thing. But I don't think we're there yet. I don't think we need to be there yet. I think it's just a bump in the road. And this is new for everyone. This is a very new thing for everyone. It's a very interesting time to be trading these markets. I'm telling you guys, if you get into this now and you learn it while it's kind of rough and interesting like this, when cycles get easier, you can print, in my opinion. This is the first time I'm personally going through a cycle kind of this hard on the stocks and stuff like that. And it's very interesting. Your portfolio swings like hell every single day. The economy is either absolutely booming or it's absolutely tanking and it's the end of the world. It's crazy headlines out there. X just goes absolutely insane all of the time. It's interesting out here, guys. It's interesting out here. But yeah, it's crazy times. But that is it for this video, guys. I just want to give you my weekly outlook. What I expect next week, I expect it to be choppy as hell. Wednesday, we have 3 massive red folder big reportings for the U.S. Data. And Wednesday, we have NVIDIA earnings, which is the biggest thing that everyone's waiting for. NVIDIA always beats earnings. It's going to be no surprise that they beat earnings. The thing is people just expect more and more and more and more and more and more and more from NVIDIA every single time. And they are already at like 85% growth year over year. They'll raise it to 90%. No one cares. They want insane numbers. And NVIDIA CEO has came out multiple times stating like, look, guys, we are growing massively. I don't know what else you guys want from us. And it is true. People just want insane numbers from a company like NVIDIA where they are putting the same insane numbers. And it's greed that these people are just wanting more and more and more and more. So it wouldn't be a surprise to me that NVIDIA earnings come out and dump, because that's what historically has happened, right? Obviously, we would love NVIDIA earnings to come out and we pump, of course. I'm not hoping for that, but at the same time, if you're just going off history, it would not surprise me if NVIDIA earnings come out and we dump, to be honest. And we also have earnings on Marvell, which is a company heavily tied to NVIDIA, and a company that NVIDIA thinks is going to be in the next $1 trillion company. That company is very interesting. That company's on discount as well. So, I think, do I think it's a buying opportunity overall in the market? I think some certain stocks. I think some stocks are. And it depends. It depends if you have balls to hold through this or not. It's not for the easy, guys. My portfolio will casually swing a couple $1,000s a day. Dead ass, too. So it's not easy out here. It's a little hard, but it's great learning opportunities. It's great learning opportunities out here, and I'm here for it. I'm here to learn all the information I can. I'm here to actually live through it, and that's kind of how I give all my experiences. Is hey guys, I've built this company. This is how I do it because I've been through it. I invest in these types of companies, and I made these mistakes. So this is what I would do because I've been through it. This is a time period where it's choppy as hell. It's rough as hell, right? Instead of me just batting an eye and looking away from it and being like, I'm not gonna try to make any money here. No, not for me. I'm just gonna go away and run and hide my head. That's not for me, bro. I want to be in this shit. I want to learn the lessons I can learn from this. So far off of this AI move, we have been able to profit. Made thousands of dollars on InnoData, money on Nebius, money on CoreWeave, money on Microsoft, a lot of these stocks. And yeah, we're just here to keep on learning, guys. And that's what I encourage all you guys to do is just be in it, bro. Like, get into stocks. Get into starting this business. Get into doing that, bro. It's like you have nothing to lose. You guys have nothing to lose. A lot of you guys that watch my videos are young people. A lot of you guys that watch my videos are my age, bro. Like, you have nothing to lose. I don't think you guys realize you need to be more active in this shit. Like, start just straight up doing this shit and learn. And just learn and learn and learn. And that's going to give you the confidence and the knowledge to teach other people what you know. And that's the only reason I'm here even telling you guys this, is because I've been investing and doing plays in the stock market since I was 15, bro, under my dad's name in a stock portfolio. So, and I'm 19 now. So that's it for this video, guys. I appreciate you guys for watching. Comment below if there's any stock you guys want me to go over. If there's any trades you think I missed this week. Again, I'm just trading gold and silver right now in the 5-minute time frame. If you guys have any other questions, any video requests, anything you want me to go over, I'll make a YouTube video on it. I do not care. But that's pretty much it for today, boys. Thank you for watching, and I'll see you guys in the next one.